Welcome to the second part of this IKS taxation video. In this part, we will be focusing on the tax related concepts from the medieval India perspective. These are the few terms that you can see over here, dear students. The first term is IKTA. IKTA means military charges. So we need to understand when it comes to medieval India, it means there was a rule of Mughals on India, right? And they used to rule the Indian territory, majority or most of the Indian territory, slowly and accordingly. And when they used to rule on that, they used to collect the tax from the people. So there are different terms related to it. The second one is kharaj, means tax on land based income. Fawazil means surplus revenue tax. If you are earning something extra, then that is taxable, and that tax is known as fawazil. Khalisa means certain areas which were under direct control of sultan. So they used to directly collect tax from the people, and they used to provide safety and other types of things as and when it is required. Zazia means it is the tax which is paid by only and only non-Muslims for their protection. So this was some or the other way negative side of tax collection, because on the land everyone has the right to freedom, right to equality and all. So for the protection of non-Muslims, they used to pay tax, and then those Mughals army, they used to protect the people, and if tax is not paid, then the protection was not provided to them in terms of war, in terms of any other king uh, having a war on the territory, etc. The another type of tax is Kankut and Dambadi, a place where all grain yields were estimated. So this was the place, Kankut and Dambandi. Was a place where all the farmers, they used to deposit their food grains, right, whatever they have grown, and accordingly, in this is the place where they used to fix a price for it, and as per the sales, as per the income revenue generated, there was a tax collection from the farmers. So that type of place where all the food grains and etc has been kept and stored and then decided for the tax purpose is known as a kankut and dambandi. The next part, we will be focusing on few facts related to it. Sher Shah Suri established a standard crop system, so standard way of measuring the yields and crops, that is known as Rai. Dasturs means a scheduled tax rates as per different areas. During the Maratha Empire and during the Maratha region, there were different types of tax collected by different king, and the prominent king over here is Chhatrapati Shivaji Maharaj. The first one is Maratha period. During Maratha period, Shivaji abolished Jagir and Zamindari system. So this system was under the Mughals dynasty, and when Shivaji ruled over that particular land, he abolished these two system, which is known as Jagir and Zamindari system. Tax was fixed at 40% of total produce given in cash or kind during the Maratha period. Shivaji Maharaj introduced Chauth, that is 1/4, and Sardesh Mukhi, that is 1/10 of total produce as a tax. So depending upon income and depending upon the how the situations and certainties were, so these two types of tax which were imposed by Shivaji Maharaj according to the different incomes and revenues generated. Now we will be focusing on the taxation system under the British Empire. The very prominent and very well-known term is known as the Zamindari system. This concept was introduced by Lord Cornwallis in 1793, right? What does this mean? Rights to landowner to collect tax from peasants out of total tax. So how this system used to work? So initially, if this is the land and there are few workers working over here, and those people who are not landowner but they are working on land and as a tenant, they are known as peasants, right? So these peasants whatever revenue they generate, some portion of that revenue has to be paid to the zamindar. So then zamindar will forward that tax to the Britishers, and this concept is known as a zamindari system. So as it is mentioned over here, 1/11th is with zamindar. So out of the 11th, out of total 11 parts, the first part, only and only one part is stays with the zamindars, and rest of the 10 parts go to the Britishers. Please mention in the comment box what do you feel, that is there a good justification with the zamindars over here. I am waiting for your comments. Rayotwari system. This was also again the second type of taxation according to the Britishers. This was introduced by Thomas Munro in 1820. In this, he gave ownership right to peasants. So in the zamindari system, the ownership right was with the actual owner of the land, that is zamindars. But here what Rayotwari system says, that you give ownership of income to the peasants, and those peasants will forward their tax directly to the Britishers. So 50% tax on dry land. So if the land is non-cultivated, then 50% tax on dry land and 3/5 on irrigated land. Next is the Mahalwari system. This system is also popular into those era. 1833, this was introduced by William Bentinck. Land was divided into mahals, and as it is known as Mahalwari system, each mahal includes one or more village. So if I say that there is the concept of mahal, so if this is the mahal, there are one or more villages under it, right? So whatever income that generates from this mahals, this mahal or any one person appointed into that region will directly collect tax from everyone and submit to the Britishers. So this was the system developed by the William Bentinck. So again it is written, as you can see, each mahal includes one or more villages under it. Village committee was responsible to collect tax and to pay to the Britishers. Salt tax, 1835. What was the motive? As we India is the largest producer of salt every year in the world, and then Britishers, when they came in India and they started ruling on India, what they did, they started applying tax on the salt. For what purpose? So that if they apply tax on the salt becomes costly, the imports from India stops, because Britishers were not they didn't came in India from the motive of flourishing India, but they came with a motive to loot India, to take maximum resources from this country, and they become rich over into their Britain country. So they applied tax on salt, and when they applied tax on salt, people started avoiding consumption of Indian grown salt, right? So this was the motive, as you can see here, to decrease use of Indian salt and facilitate to purchase more of imported one to benefit the European trader. So Mahatma Gandhi was the person who did salt satyagraha in March 1930, and that satyagraha is known as Dandi March, and which is a very popular type of march where hundreds of people came with him, and he walked around 300 kilometers from Sabarmati to the particular place, Dandi, and then he took a pinch of a salt from the land and he kept it on his tongue, and this broke the tax on the salt. So this was in some or the other way, it was a gesture by Gandhiji that it is our land, it is our resources, and that's why we will not pay any tax to you all Britishers. And see, what I am doing is I am avoiding your rules, I am breaking your rule. because we don't want you in India, as you people are exploiting India. So this was the purpose related to salt satyagraha, and this was the event that happened. Now we move to the tax system after independence, that is post independence tax system. First IT in India, that is first income tax related concept in India, was introduced by James Wilson on 24th July 1860. To fight scarcity of money from Anglo-Russian War, 1866 IT Act made more comprehensive tax were increased. Right? So in 1860, the income tax related policies were framed first in India by James Wilson, and then as there was a Anglo-Russian War, there was a need for Britishers to fight, and there was a need for money also. So what Britishers did, rather than using their treasury's money, they focused on India. They started charging more and more tax from the Indians, and that extra tax collection was used for serving the war related purpose. See how what was the mindset of those people, and that's why it was a good event that they left India, because of the struggle of we common people and those people, the freedom fighters, etc. 1922, right? Every year tax rates to change through Special Finance Act. So in the year 1922, it was decided that Britishers will change the rates of tax according to different events and different certainties or uncertainties, right? TDS was made compulsory for private employers. So in India in 1922 was the first time where the concept of TDS, tax deducted at source, was introduced for the private employers. And now as we can see, CBDT and CBEC, right? CBDT means Central Board of Direct Tax, and CBEC means Excise and Custom, are the regulators of direct and indirect tax in India. CBDT focuses on the direct tax aspect, CBEC focuses on the indirect tax in India. GST introduced in India in July 2017. So all this is a part of your post independence and very recent reforms into the taxation field. On 4th September 2025, very recent, GST rates were reduced and new schedule of GST is available on the particular website. Now let's focus on some principles of modern taxation system. Principle means the basic bridge on which the taxation system between the common people and the government flows smoothly. So canons. So there are 7 or 8 types of canons. These canons are actually the principles based on which the tax related rules and regulations are framed. So the first canon is equality, means the tax should be collected equally from each and every person depending upon their income, right? So it is very much similar to the concept of Ramcharitmanas, where it is said that as smaller pond has very less water in it, so the tax consumption should be very less, and those of the bigger ponds, the tax collection should be more, the same as the sunlight collects the water vapor from each of the different resources separately. So this is canon of equality, canon of certainty, right? Canon of convenience. The tax collection should be convenient, it should not burden the common user, right? The common taxpayer. If it is burdensome, then no one will be paying tax, right? And this concept, tax should be certainty. It means what? It should be certain. If income is generated, then you have to collect the tax, and according to the calculation properly. Canon of economy, canon of productivity, right? Economy and productivity should be kept in mind. Canon of simplicity, canon of diversity, and canon of elasticity. These are the different principles under the modern tax system. Tax systems around the world are based on the 3 common principles: progressive tax system, regressive tax system, and flat tax system. When we say progressive, it means tax increase as income increases. When we say regressive, low income earners pay larger percentage as tax. Regressive in the sense it means when tax is increased depending upon the increase in income, we can say that it is progressive. But when income is constant, but then too based on the market condition the taxes keep on increasing from time to time, then that is known as a regressive tax. It means what? That in the progressive tax, as income increases the tax should increase, that is the common thing, right? But when it is constant, every time the market doesn't improves, so when the income is constant but the tax is rising slowly depending upon the market rules and regulations and other market behaviors, then that type of tax is known as regressive. Flat tax system means single tax rate on some or the other common products and services. So finally, this was about the taxation from the Indian perspective, from the IKS perspective. I hope you understood many and maximum of the concepts from this video. Thanks for watching. In the next session, we will be coming with some another important topic from the IKS perspective.